Good morning and welcome to Business Morning here on Business Day TV. I am Destiny Momo. Thank you for starting your day with us. Now let's move to the first conversation for today. We turn our attention to a significant development in Nigeria's education and financial sectors as the federal government has unveiled a 10 million naira loan scheme aimed at providing financial support for staff of universities, polytechnics, and colleges of education. This initiative, launched under the Office of the Head of the Civil Service of the Federation, seeks to ease the financial burden on academic and non-academic staff, enabling them access sizable funds for housing, personal development, or emergency needs at presumably favorable terms. But what are the eligibility requirements? What's the interest rate? And how accessible is this for the average lecturer or administrator? And most importantly, is this a sustainable move or just another policy on paper? Before we bring our guests in, we'll go on a short break. We'll be right back. Stay with us here on Business Morning. You're welcome back to Business Morning here on Business Day TV. Before the break, we talking about the financial institutions, university, polytechnic finances. But before we go on that move, let's deviate a little bit into fintech. Now, in the past years, entrepreneurs and individuals have struggled with accessing financial services because of challenges in the traditional banking sector. Remember the long waits you endured to open your first bank account. You had to queue for days, remember? Now, even after opening an account, you likely faced challenges over failure to make instant payments. You even had to spend time in the lines again to address failed transaction issues. Also, financial services remained limited since not everyone had easy access to an account. But today, however, these challenges are becoming a thing of the past, thanks to the increase in fintech companies in Nigeria. With mobile banking, digital payments, and other innovations, Nigerian fintechs extend financial services to previously underserved communities, thus driving financial inclusion. Now, joining us unravel this reality is Mr. Dotun Adekunle. He's currently a Chief Operating Officer and Chief Technology Officer at OPay in Nigeria. Good morning, Mr. Dotun.
Good morning. I'm happy to be here this morning.
We appreciate your joining us in Business Morning this morning. Now, very quickly, how have fintech startups disrupted the traditional banking model in Nigeria and also globally?
All right, thanks a lot. I think that the primary ways in which we see that fintechs have disrupted banking or traditional banking in Nigeria and globally is first by when we look at unbundling. Fintechs have unbundled banking. Instead of just having one big institution that does everything, we have specialized fintechs that offer seamless retail services, whether it's in the area of payments alone or savings alone or lending or insurance. So lots of specialized fintech services addressing particular needs within the society is what you have. Apart from the unbundling issue, you also have that fintechs have been able to reach whether it's on unbanked populations or underbanked populations within different ecosystems across not just Nigeria, across the globe. And finally, what you also have fintechs that have achieved is that globally they've redefined what speed is, they've redefined what convenience is, and they've redefined what personalization is. So that instead of just banking services, don't do in general for everybody, fintechs have been able to provide personalized, individualized, hyper-localized services to individuals, consumers, and merchants across Nigeria and across the globe.
Wow. So now, in what ways are fintechs outperforming traditional banks in terms of customer acquisition and also retention?
Thanks again. I think that for most fintechs, they're a digital first they're digital first organization. So that area of digitization, whether it's in customer onboarding, whether it's in support, whether it's in offering of services, these are ways in which fintechs have outperformed the traditional banks. Where you have to go to a traditional bank and fill a form or queue on the line, those processes are different from what you have in a fintech, where you can just download an app or dial a USSD code and you are able to get your banking or your wallet account opened immediately. So this is very appealing to the modern generation, especially the digital natives, right? Millennials and Gen Z. They want as low as possible friction when it comes to onboarding or support. And then fintechs also have all those gamified experiences that you have on their apps. So these ways, in terms of digitization, is one way that fintechs have done better than banks. Second way is also in addressing localized communities. So the bank branches are not enough to serve most communities across Nigeria, but you then have fintechs agents using agency banking to get into the nooks and crannies of society. So in Maiduguri, you have them. In the interland, in Oshogbo, or whatever it is, you always have fintech agents being available in the local communities of individuals across the country.
All right, so do you see fintechs as a threat or a complement to the traditional banking ecosystem? And if so, why?
I do not see fintechs as a threat. I think that it's fintechs have brought service that either to the original or traditional banks could not bring to the table. So one of the things that we say at OPay, for instance, is that we are collaborating with banks and we're not competing. So even the fintechs themselves depend on the services of the bank to offer services to the customers and the merchants in the field. So the fintechs are no threat. They will take some areas of service away from the banks, but the banks are not threatened. They will just move into another area or focus on bigger areas that fintechs cannot address.
Now, talking about the adoption of AI technology, the blockchain and mobile payments have really helped fintechs gain market dominance over traditional banks. Do you think so?
Absolutely. Just because fintechs are more nimble, they are more agile, they're able to respond faster, to develop faster, to evolve faster. They've been able to adopt some of the newer technologies because they don't have the traditional bureaucracies that you have in organizational banks. They've been able to adopt AI and modern technology to enhance fraud detection, credit scoring when you're doing lending, personalized engagements to improve the user experience, and things like blockchain. Blockchain has allowed fintechs to also be able to do decentralized finance, where the transactions are immutable, they are low cost, they are instant across border and within country, and things like that. So yes, adoption of new technologies have gone a long way to empower fintechs over the traditional organizations.
So true. Now, what role does user experience and mobile first design, what role do they play in fintechs growing popularity compared to conventional banking apps?
A massive one, a massive one. For digital natives especially, right?
Okay.
Poor design means distrust. Fintechs often offer cleaner, responsive interfaces. They offer quicker onboarding. They offer instant feedback. And they offer kind of more human-centered flows that traditional banking apps or web applications do not offer. These often feel a little bit more clunky and transactional, while fintechs tend to have things that are in your face. They are there, they understand the nuances. Take OPay's features around not being able to transact above a certain threshold, or the common mistakes that people make transacting to the wrong number. Those kind of things are things that fintechs have done in adapting to the needs of consumers across board.
Talking about regulatory landscape, what regulatory challenges do fintechs face that traditional banks have traditionally navigated with ease?
I think that for in Nigeria especially, there is some complexity around licenses.
Okay.
So while for banks, you're either a commercial bank, a merchant bank, or you're a microfinance bank. What you have is that there are different types of licenses that can do different kind of segmented services. So fintechs typically have to navigate, do I get a switching license? Do I get a mobile money license? Do I get a PSB license? Do I get a PSSP license? And what services can I offer with one or two of this? And many times fintechs have to get a combination of licenses for they're able to operate. Unlike a bank, once you have a banking license, you have a plethora of services that you can offer to the customer. So there is that licensing complexity. Apart from that, there is also the issue of capital requirement, right?
Okay.
The fintechs do not have the vaults, the financial vaults that the traditional banks do have. So they can't match their balance sheets. And so they have to be nimble, they have to be agile, and at the same time have to be very, very efficient in how they utilize their resources. Thirdly, maybe in the area of compliance, right? A lot of fintechs are not yet they don't have the bureaucratic structures. And so sometimes they also lack the compliance level, the governance levels that traditional banks do have. But we've seen that the CBN has done a lot of efforts in the last few months to about a year to improve compliance governance across fintechs in Nigeria.
All right. So now, our current financial regulations in Nigeria or globally, are they favoring fintech innovations, or are they playing catch up with the pace of disruption?
I think the central bank in Nigeria has done well. They've been playing catch up better than most other central banks across Africa. I've spoken to a number of them, and they say, "Oh, your regulators will engage you. They listen to you. They have fora where you can contribute." But of course, innovation will always precede regulation. There's no way that we can stop that. So, but the regulators in Nigeria are making strides. Some of the things that they've done, like new licenses, like the PSB licenses, creating a sandbox environment, are things that have helped to see that things go forward in Nigeria. Open banking are some of the things that the central bank in Nigeria has done. There are areas, of course, where we think that the regulation needs to catch up, especially when it comes to the area of blockchain or crypto assets or digital assets across board. But by and large, I think Nigeria, in comparison with the rest of Africa, has done well. But innovation will always precede regulation.
All right, so before we conclude, what shifting customer expectations are fintechs capitalizing on that traditional banks have failed to really adapt to?
I think that the biggest thing that has allowed a lot of fintechs in Nigeria to gain traction has been the issue of availability, right? Service availability, reliability. It was almost normal for you to have a failed transaction with your banking app or with your banking service. It was almost normal for you to be delayed before your money is returned if you had a failed withdrawal at an ATM. It was almost normal for service not to be available, and Nigerians were okay with it. But when fintechs came on board and began to have that 24/7 availability where service is almost never disrupted, that created a move, especially in the retail side, of a lot of customers shifting their retail transactions to fintechs and leaving their larger transactions with the bank. So availability is one point. Of course, there's also the area of personalization and control. Hyper-localized apps that fit into the lifestyle of individuals, that answer their daily stuff, their daily requirements, are things that have shaped customer expectations, and fintechs are cashing in on that across the divide. There are several other things, but I think I can stop at that too.
All right, now, in conclusion, what gaps in Nigeria's banking system have fintechs feel that banks failed to address for decades?
So when you look at financial inclusion, agency banking, and banking the unbanked, you'll find that most fintechs have played better, have fared better than the traditional institutions. Fintechs have reached rural and underserved populations through agent networks and mobile wallets. A lot of people are opening their very first financial service through a fintech and not through a bank. Also, in the area of microcredit, most banks are not able to offer credit to certain people within certain segments of the economy because they don't have a history, they don't know you, and things like that. And fintechs have been able to address this. Also, youth banking. Most of youths who are digital natives, students, NYC members, and things like that, people who are on campuses have been able to adopt fintech solutions rather than banking solutions. And then for SMEs, especially, you also have fintechs playing stronger. Traditional banks are able to go to the enterprise and large corporates, but then fintechs are able to address SMEs with tools, bookkeeping, invoicing, payments, whether it's local payments or FX payments and things like that. And these are some of the services that we as OP have also done.
I'm sure Nigerians will really appreciate your fintech for making it easy for a lot of them. Thank you so much for joining us, Mr. Dotun. We've been talking to Mr. Dotun Adekunle. He is currently a Chief Operating Officer and Chief Technology Officer, OPay in Nigeria. Thank you for joining us. We'll go on a short break. When we come back, we will be talking and addressing financial issues in higher institutions. Stay with us. Still Business Morning. Welcome back to Business Morning here on Business Day TV. Now let's move on to our second conversation for today. We turn our attention to a significant development in Nigeria's education and financial sectors. The federal government has unveiled a 10 million naira loan scheme aimed at providing financial support for staff of universities, polytechnics, and colleges of education. This initiative, launched under the Office of the Head of the Civil Service of the Federation, seeks to ease the financial burden on academic and non-academic staff, enabling them access sizable funds for housing, personal development, or emergency needs at presumably favorable terms. But what are the eligibility requirements? What's the interest rate? How accessible is this for the average lecturer or even administrator? And most importantly, is this a sustainable move or just another policy on paper? Joining us this morning to break it all down is Comrade Adeyemi Samson. He is the National Associate of Nigerian Students and the National PRO. Good morning, Comrade Samson.
Good morning, ma'am.
Thank you so much for joining us. Now, very quickly, what are the strategic objectives? What are the strategic objectives behind the 10 million naira loan scheme for tertiary education staff?
Thank you very much. This loan was announced on the 27th of this month, July, that's about 2 or 3 days ago. And one of the major objectives of this loan is to ensure that academic staffs and non-academic staffs of tertiary institutions in Nigeria can also be able to be benefits to have access to loans from the federal government. For example, the students are enjoying what you could call NEL fund today. And also, when we look at the educational sector of the country, in any nation, it's not just comprising of the students alone. It comprises of both the students and the staffs. And in this essence, there's need for also to ensure that staffs who are putting their best into ensuring that the lecture, they push them through the academic journey in any institutions in Nigeria are also be motivated and also have plans for them. And this is a good initiative for coming on board. And it is very, very commendable that the government could think outside the box and realize that truly, aside salaries and the jobs lecturers and staffs are doing, they can also go into petty farmings and poultry works. And this can also be done outside their salary by having access to loan. And this loan itself, at least 10 million, something that is not, is something that can cater for such kind of a farming, either poultry or livestock or cash crop or whatsoever. It's something that we believe that will also motivate lecturers, it will motivate staffs, and it will also curb little petty corruptions and little bribery in the academic sectors. There are little issues of signing one document or the other, whereby a student want to do some clearance and they will be asked to tip some staffs and likes. We believe that this will keep such kind of abnormal practices away from institutions whereby staffs of the universities also are having opportunity to expand and also to have a good livelihood. So
True.
thank you.
True. Now, what is the funding source for this scheme, and how sustainable do you think it is in the long term?
Oh, thank you very much. We just have to be proactive and be hopeful and have the belief in the government to if we want something to work out. Then we also have to give the confidence in it and have the belief. When the Delford come on board, there was a lot of doubts from every year and there that it is not possible. But today, I'm sure, as at yesterday, I think I read it that the 2025-2026 academic section portal for loan application is open already. So that is second year already that we are running into. So it shows that the progress of Delford, despite the large number of students in Nigeria, will give us a reason that truly this loan also can work. And the way we look at it, it has been put under the Bank of Agriculture, that's the BOA, to facilitate this loan because it's under agricultural process. So it's something that we believe that the method of this also be much well adequated, because if we look at it, the number of staffs that we have in tertiary institutions is not up to 30 or 40% of students we have in Nigeria. Okay. So if that fund can conveniently accommodate students in Nigeria, then definitely we should be able to find, the government should be able to find a way to manage, what was it called? This loan under the BOA. And we know BOA has been in the system for a while now, and they should be able to adequately handle it and be able to ensure that it moves on and there is hope for Nigerians, even beyond this government. Please just hope that even after this government, there will continue of something of such nature. And these are things that we believe that can really work if there are initiatives that the people that are doing the work are also having access to most of this, not just them having reading about it that this is a loan, this is a loan, this is a loan. So SMEs and the likes are for a lot of undergraduates, even graduates, even some students who benefit from SMEs. But this that's been addressed to institutional staff. I mean, it is something that will even cause some strike, because most of these issues of strike at times not always on the end allowances and the likes. Most of it also relies on motivations and other things like that. But this is something that we see that is laudable. A lot of staffs are into farming. Yes, a lot of lecturers are into farming and staffs. But if they have access to this, also, even those that are not into this business already, and also it is a good thing in the essence that also the food bank of the nation will be more secured. And they will also ensure that we are also having a nation that to produce what we are eating as we have always been agitated for.
Okay. So now, which financial institutions or government agencies are involved in administering or even disbursing the loan? Can you just fill us on that?
As far as it is, with the little information the government has released to us so far, is the fact that the Bank of Industry and the BOA, Bank of Agriculture, will be the two agencies that will sit to this loan. And if they are sitting to this loan, farmers are having access to loan through BOA for years now. And that has been an agency that has been in existence, even despite the fact that there has been a lot of change in government. It has always been in existence. So we believe that then having putting this loan scheme on that BOA will ensure that it is continued even after government. After issuing regime, it is continued. So it will just be part of policies that and activities that BOA will have to be carrying out, not just of farmers alone. This now will not be another sector. Probably there will not be another department in BOA that will look into this loan for tertiary institutional staffs.
Okay.
So BOA has been set aside to anchor this and pilot it.
And so far they've been trying. So now, what are the eligibility criteria, and how will applications be verified and approved?
As I said earlier, that we are just trying to use the Bell Fund as a guide to this, because as far as it is now, I'm sure by the end of this week or next month, at least by August, we should have full details of this loan application process, verification process, the disbursement duration, and the likes. So what we still have now is the announcement of this loan, the agency that will anchor it, and what the loan is meant to be, and the amount of the range of this loan. So I believe very soon now we should be able to have more information on it. For example, now if you see Nelford, you apply once you are a legitimate student and you have a matric number. So probably all institutions too will have to enroll the data of their staffs with BOA, probably a different portal created for them. They will enroll them. Then any staff that applied, the BOA will be able to collate such data and forward it back to the institutions for verification. And probably after that has been confirmed, truly, we have a lot of unions on campuses. We have the ASU, we have the NASU, we have the ASU, we have the SANO, a lot of them like that. So I believe they'll be able to ensure that this is verified. All staffs in any tertiary institutions in Nigeria also have their ID card, they have their staff numbers. So probably through their staff numbers and the other details with their institutions, they'll be able to be verified. And also, they will also be able to put in their bank account details and the likes, whereby they also receive the payments and have their own dashboard, just like Nelfond. So we believe it's achievable if we have the Nelfond. And what I do say is the fact that the numbers of students we have in Nigeria is the number of lecturers and staffs we have. Let me just use the word staffs we have in tertiary institutions in Nigeria. That's about 25 to 30% of the, and even if it's up to that.
Okay.
So I don't think it should be even up to 30%. So I believe it should be easy to manage just using the template of Nelford as a guide.
Okay. So can you bring us up to speed on the repayment plan? How will the repayment plan, is it realistic? The repayment plan, is it actually realistic? Are they actually expecting these loans back from these students, or is it a way to just keep them on their toes and make them, utilize it and make it useful for themselves?
Okay, thank you very much. I think it is the repayment plan. There's not much information on it yet. But still yet, so the little thing that can speak about it is the fact that it is possible. I see, the only thing that I do say in Nigeria is the fact that is our discipline that matters most in Nigeria. If we want Nigeria to be better, then we must be able to ensure that we are disciplined and we are true to ourselves. Yes, in the essence that this loan, lecturers and staffs apply to banks and see requests for loan, even especially for projects. And I can bet it with you, you see that most of these lecturers and staffs, they make use of their cooperatives and their unions, especially when they are having projects like buildings or other businesses, their personal life. So automatically, that kind of loans that they have with their standard cooperatives and the likes, and they will ensure that these loans are being deducted from their salary monthly. If that can be done for years, and even before some of us were giving back to, they've been running most of these cooperatives and these deductions, and it's working perfectly. So I believe government board, then something of this can be done by the government. Then the staff too should show willingness to apply and also comply in the repayment plan, because automatically, no matter, I know till now there's no any figure if there will be interest on it or not. So far there is no any communication or any interest on it now. Then automatically something they should be able to welcome and ensure that they utilize it well, and also be sincere in the repayment plan, which I believe that it will be very flexible, more than expected.
So now, are there comparable schemes either within Nigeria or in other countries that this program is modeled after? Like, what lessons from past staff loan schemes are informing this initiative?
With the data I have with me, probably I've not done much research on it presently, but I can say that I'm not aware. Yes, I'm not aware of any nation that has put in this kind of loan scheme for staffs of tertiary institutions in their country, aside from the ministry and institutional loans and the likes. But coming on board, having a replica of student loan for staffs I'm not aware of that. We have a lot of countries that practice student loan, US and likes. We have a lot of them, but staff loan, something that I'm not sure I've been able to come across it in the research or any content that much. So either we should even limit as practice, something that is commendable, and I will ensure the government to keep thinking outside the box. These are the critical part of things that can ensure that all citizens of the country are engaged and are doing beautifully well. If we are talking about agriculture, there must be a good environment and motivations from the government to encourage people to go into it. And these are kind of laws that can at least assist staffs and families to be able to have one thing or the other to do aside their careers like this. Thank you.
Okay. All right. So lastly, do you see this as a first step towards broader financial intervention for the education sector workforce? Do you see it that way?
What do you say, ma'am?
I said, do you see this? Lastly, I'm asking you the very last question. Do you see this as a first step towards broader financial intervention? That's this whole loan scheme. Do you see it as a broader financial intervention for the education sector workforce?
Yes, I see it. I was discussing with someone last week and I said the issue of subsidy that we have, many people still say that they prefer subsidy than these loans. And I'll tell the person that how do we measure subsidy? How do we measure the accountability and transparency of subsidy? How do we measure the implementation process? How do we ensure that subsidy on education is well catering for the entire nation? And how are we ensuring that the same subsidy the poor are enjoying, and it's the same subsidy the rich are also enjoying? And how are we even ensuring that it is not? So there are a lot of questions that comes about subsidy. And I was giving a scenario to someone last week. I went with the discussion. I said, if government subsidizes education by 80%, and the school fees of 100,000, government is already catering for 80,000 naira. And the school that's supposed to charge just 20,000 naira to balance the 100,000 for the institution is charging another, let's say, 65,000 naira. So by the time you add 65,000 plus 80,000 naira subsidy from the government, that's how much? That's 145,000 naira. And the total amount for that tuition fee is supposed to be 100,000. So there has been excess of 45,000 with the school. This is the issue with subsidy. Then how are you going to even be aware of such information that, okay, government are taking care of this particular amount? Because it will come in particular per head per student. It will come as a form of subvention monthly to the institution. So how will they now divide probably 850 million, 650 million coming to them monthly per student? Before you know it, you will just run into expenditures and the likes and structures. And before you know it, they will just allocate 20 million to tuition fee. And by the time they will break it per student in that institution for that section, you see that students will still be paying exorbitantly. So the best thing we can do now is the fact that go to the telephone portal just from your 200 level to either 600 or 500, and you have access to this money. So even your repayment will not be as early as it is. Once you are getting to a state that, okay, truly satisfied that, okay, truly you can start repaying this loan by 10%. So exactly. I think it's still more better when there's transparency in the economy.
You're so very correct. Thank you so much. And I've been talking to Comrade Adeyemi Samson. He is a National Associate of Nigerian Students National PRO. Thank you for your time. We truly do appreciate everything you've unveiled to us concerning these loans. We do appreciate you. Have a great day.
Thank you very much. And you too.
And still watching Business Morning, and that's the much we can take on Business Morning today. Up next is Big Story. My name is Destiny Mama. Keep watching Business Day Television.